All right, a very good morning and welcome to the sixth session of Investing Tuesdays right here at the Nairobi Securities Exchange. And so glad that you could join us this morning, and I hope that you have been following up the series so far on the 5 episodes that we have had before, this being the sixth, of course, and it's more like almost at the climax of you getting to your journey of investments. Now, before I proceed on, I would just like to give you a preamble of what we've talked about in the previous sessions. The first one, of course, we talked about starting your investment journey. Just starting your investment journey, what you need to do so that you can get yourself kick-started. Second one was about preparing an investment plan. Just how do you get a plan so that at least you can get to invest. And of course, the third one was about getting ready. And we even coined it Tunaanza Kuinvest, and I hope that you did. And I hope that you took up some shares, some stocks out there, so that you could at least get started in your investment. And because I'm not hosting alone, I'm with Maureen. Maureen will tell us about the other two. Maureen, how are you doing?
I'm very well, Naina.
Yeah.
Good morning to you all.
Yes.
So for our fourth session, we had all you need to know about shares. And for our fifth session, we had how to invest wisely, basically to chambua shares. Maina, what would you tell those who missed our previous session?
They better get back to those clips and check, because that's free education, free school for you, so you can get started on your investment journey. Never say that you never know. Never say that these numbers don't make sense, because right now they were demystified for you in the simplest terms that you could get, so that at least you can start. It was a very easy session for people to follow. And yet today as well, we have an amazing one. But before you introduce what we're talking about today, Maureen, I would want to just give a teaser to the people who missed last week's session on how to invest wisely. And so that at least you can get to know what you missed on something of that sort, so that at least you can go and play the bigger clip later on. So over to you, our producer, so that we can get to see what we missed.
How does one balance their share portfolio to minimize risk?
Never buy anything you don't understand.
You have to analyze a company within its industry for you to understand its market positioning.
What are some of the good picks you would recommend at this juncture?
The idea now is to buy low, sell high.
In every brokerage, there's a research department.
Markets are driven by information.
If you don't know, ask.
You need to have a feel of what is happening in the environment.
Chickens that hang around with eagles learn how to fly.
You're not denying yourself by putting some money aside.
Spending is easy, but saving is the hard part.
So now you know, get the information, that's the key.
From the comfort of your home, wherever you are, you can access this very valuable information.
Wow, great. There you have it. So, no excuse. And today, Maureen, what are we talking about?
So today we are talking about investing successfully in the stock market. And we have investors who have already invested in the market. And I'll start by introducing our first investor, as well as our coach. We have Mbithe Mwema, who has 15 years experience. She's an investment banker. She is the CEO and founder of Infallible Group and Infallible Academy, which is a financial consulting company that trains on investment. She hosts and produces a daily show on investments that is called Market Today on Metropole TV, which has produced over 350 episodes. You can imagine the wealth of information that maybe those who have not yet started watching have already missed out. Welcome, Mbithe. We have in the middle Pius Moshiri Mogo. He is a CFA charter holder. He has over 15 years experience in the investing successfully in Africa. He is the founding CEO of Nabo Capital, and he has overseen investments worth investments transaction in excess of 500 million USD. Welcome, Pius. In my immediate right, we have George Kamau. He is an investor, and he is the CEO of and a business partner in the Athlete Studios. Welcome, George.
Wow, we have what I would call a cocktail of experts. Many thanks as well for joining us. And just before we get and dive into the questions, I would want to prompt our viewers that from wherever you are, please, if you want to grab a cup of coffee, it's now. Maybe you're even late. But what is most important is a pen and paper, because you want at the end of this session to get to start investing, as we're calling it, wisely. So. Please, anything good is worth sharing. So if you're on Facebook, I would urge you to click on that share button, because you never know, your friends, your family, everybody else needs to know, so that at least they can get on this journey of investing. So please share it widely, so that at least as many as they can get to understand and get to grow into this. Over to you, Maureen, on our first questions for the day. Where are we starting?
They say ladies first, but I'd like to change it a little bit and say ladies first, but men before. So I'd like to start with Pius. So Pius, tell us about your investment journey. What has led you to start investing in the capital markets, and how has the journey been like so far?
Thank you. Thank you very much for that question. I don't know where to begin, because I remember my dad wearing power suits, and I thought he was the coolest dad, and I thought he was an investor. Actually, he was a banker. But that sort of gave me that idea. Investment is something that I would want to do. Then I joined, I was very fortunate, because investment in Kenya is a very small industry, and I got an opening to join Centum in 2004. I joined as an accountant, but during my interviews, I was very clear that my interest, I was only joining them so that I could become an investor. So 2006, I began my journey in investment. And fast forward, 2008, our current CEO, Dr. James Moria, he was appointed as the youngest CEO amongst listed companies on the 1st of December 2008. And he called us to the boardroom. And we were just a team of about 13, 14 people. And his first words were, "We are all going to be very rich." But his next words were a warning, but you're going to work very hard. We're going to work very hard. And he went on to say, we are sitting on a gold mine, and having been away from Centum, because he had joined Centum before then, he left for a short stint, he had seen the opportunity that Centum was actually sitting on a gold mine. And the opportunity was no longer just in Kenya, but the opportunity was in the entire continent of Africa. So it's a long story, but I'm going to make it short. We proceeded to put together a strategy, and we presented to the board, and this is how it went. So we said, we are a 6 billion company today, and in the next 5 years, we'll be a 30 billion company without raising capital. We are going to sweat our money for the next 5 years, and we'll be a 30 billion company because of the opportunities that we've seen. And we asked the shareholders to forgo dividends for 5 years because of the opportunity that we had seen. And we'll not ask them for an extra coin. Yeah. So the first thing, we set a target. The second thing, we put a strategy. And the strategy was dictating that we need to grow by at least 25% every year for 5 years for us to hit our target. So every week we were meeting, every month we were meeting to see whether we are on track to do that. 2014 March 31st, which is the fiscal year end of Centum, we were 29 billion. We missed our target by 1 billion shilling. But
and you were at 29 billion.
We were 29 billion. So we created quite a bit of value. The Centum share was at 8 shillings when we began the journey. I think at that point it was somewhere around 32 shillings. So there was quite a bit of appreciation during that period of time. So that's how we began our journey. I began my journey really in investing. And the lessons that I can share here from that is, number one, you've got to set your target. Don't just invest for the sake of investing. What is your time frame? What's the target? Number two, you need to have a clear strategy on how you're going to achieve your target. And number three, you've got to be very ruthless in monitoring your strategy, the implementation of strategy. Every week, every month, sit and monitor whether you're headed to there.
All right.
More to come.
Yes, more to come, right?
Thank you.
You know, Pius, I can't help but acknowledge the fact that you're talking billions here. But the good thing is that you said you had a session and you agreed that you're going to make this money, but it's going to be a lot of hard work. So my question is this: did you start at such a high, or did you start on a 190 level? I just want to know before the billions came in.
I think as much as we are also investing for Centum, we're also investing for ourselves. So for me, whatever I had, I also started. And there has to be a beginning point. Whatever you have today is enough. Whatever we had then, from an institutional point of view, 6 billion looks a small amount, but from an individual it looks a lot. Peter will tell you, I mean, out there it's a different story.
Yes.
Yeah.
Definitely.
Exactly.
All right, thanks for that. Maureen, let me reminisce on the billions for now. Please proceed on.
Thank you, Piers. Thank you, Maina. So the next question will go to Mbithe. We have George here, who is a newly investor, and I must say that he is a product of our Investing Tuesdays webinar series. So that is very good, George. So what would you tell, what advice would you give a first-time investor and looking at how and where to invest?
Thank you so much for that question, Marie. But first and foremost, to you and to Mina, thank you for inviting me here. And well done to the NSE team just for starting this. It's important to just have the conversation going. So I have been following, and I think you're doing a fantastic job. And George, karibu to the markets. I think all of us are 15 years plus, but it's never a good day to start. So I think as you start out, let me probably answer it in a different way. I know Pius. Pius was my senior and was also my client, and I can attest to what he has said, because he was one of the top tier fund managers that I was engaging with on a day-to-day basis. So if I didn't know anything, I'd go and ask him, how can I make your life easier? Then he'd tell me, then that would be my assignment of how do you go and learn this? So I'd say in terms of trying to look at the market, before you get into it, can you learn something about it? You know, the rationale for learning about it is when you are investing, possibly you're trying to see, am I going to be in a better place more so when I get to the point of retirement? Can I start putting money today, looking at 20, 30 years from today? And if you have that mindset, then it won't cost you to delay your investment decision by a month or 2 months or even 3 months, just to try and understand the basics. So when it comes to the shares, there's a lot of data that comes out from the NSE and also the local dailies put out information. And you want to understand, is this company earning? Can it pay a dividend? Because ideally, when you come to the market, you're earning in two ways. You'll either earn a dividend if the company is profitable and it declares a dividend, or it's capital appreciation. You're buying it low so that it can go high. So when I look at the NSE, I look at it like going to a supermarket. There are many opportunities. There are over 60 opportunities, but what makes sense for you? So you sort of want to start familiarizing yourself with that, but I'll also agree with Pius and say that you need to have a target, because I notice that most retail investors will come and say, we want a cheap stock CIC because it's 250. Cheap is relative. Cheap is price to earnings ratio or price to book ratio, because you could have a company that is cheap in terms of cents on the board that we are looking at, but it has not been generating earnings, so you're paying a high multiple for it. So I think we have so many opportunities to first go and learn what is the price to earnings ratio, what is the dividend yield. If the government of Kenya is giving you an 8% return for 1 year paper, that's again information that's public, then you're trying to see, can I get something that's closer to 8%, or can it give me 5% appreciation? So at least if I'm looking at risky assets on the NSE, I'm trying to see 15% or more per year is possibly a target that I'm trying to get at. Thank you for the question, and back to you, Maureen.
Thanks for that. And you know, Mbithe, I picked one statement from you that the NSE is like a supermarket So that means for our viewers who are watching, they better get into it, because vividly, you have to get into a supermarket to know the deals that are there, whatever is being sold, everything else. And so the encouragement, I think, or the take out is get in there, find out what you can take. But of course, being careful not to just jump into anything. Maureen, I'm taking notes.
All right.
Yes.
So I'd like to know, you've mentioned something about price to earning ratio, price to book ratio. Could you kindly expound a little bit more for someone who doesn't understand such big terms?
Thank you once again for that question. So I've said the first thing about your investments, especially on the NSE, is either the company will pay you a dividend or you'll buy it at a low price and it goes up. How does a company pay you a dividend? So a company starts its operations and then it sells either goods or services and it generates revenue. That's what we call the top line. But to generate that kind of revenue, it needs to have expenses. So human personnel, the building, the people it has to engage with just to deliver the goods or the products. Those are the operational expenses. Then it deducts that, then it has to pay its taxes, then it's left with the profit after tax. From that profit after tax, then it can decide for the shareholders, we'll pay you something, right? That's where the dividend would come in from. So if the company has not been profitable this year, the previous year, or the year before, or it doesn't have a stock of cash somewhere, it becomes harder for you to get money out of it. So from the information that comes from the NSE, there's a weekly price list, and I think most of the brokers also have something similar. You'll see a column called earnings per share. So you're sort of looking for a company that has a positive earnings per share, because you're like, okay, at least this company is profitable. There's the possibility of being paid a dividend. Then the next thing you want to do is when a company makes its earnings, because we always look at a company as a going concern, meaning that it will be here this year, next year, it will continue, not to perpetuity, but at least in the medium term, into the foreseeable future. And because it will do that, the practice is it will not distribute its earnings. So if a company makes $1 million shillings, for example, it won't take 1 million and distribute to you. But if it has 1 million shareholders, in effect, it means if it was to divide up the earnings, then each shareholder would ideally get 1 shilling in terms of earnings, right? But because when you come to the NSE, what we are seeing here is not the earnings. This reflects the investment thesis, what people think the price should be. So if it's 1 earnings per share, 1 shilling, which is the earnings per share, and the price here is 2 shilling, then I'm paying 2 times earnings. That's okay. But if I'm paying 20 times earnings, that's expensive. It's so important to be able to get that differential, because if I come and look at just this price and say it's cheap because it's 2 shillings and the other one is 1.46, then I miss the point. You have to look at the relative valuation, look at how much are the earnings per share, then how much am I paying for the earnings per share, because no one wants to buy something expensive, you want to buy something cheap. I hope that answers it.
Yes, please. I think Pius can probably, because, Bide said that she looks up to Pius at some point. Yes. So Pius, please, you can cap it up.
I just want to add to what she said. I mean, I know it's a very difficult thing to absorb. When you hear it for the first time, I was also asking myself, what is this PE ratio? The Safaricom PE ratio is 20. Mumia's PE ratio is something else. What does it mean? And when you go to the supermarket, as she has called it, and you want to choose what to buy, you choose value for money. Right? And you want to choose something that is not necessarily cheap, but something that is value for money. So when you go to the supermarket called the Nairobi Stock Exchange, what are you shopping for? You're shopping for profit. You want to buy the most profitable company. Correct. So the question is, how much do you pay for the profit? You get it? So the PE ratio is the measure of how much you pay for every shilling of profit. So if, for example, let me look here. We have, I want to take some 2 extreme examples. We have Standard Chartered at 146. We have CIC at 2 shillings and 17 cents. So to a layman, it looks like CIC is such a cheap stock.
The 2 shillings, yeah.
Correct?
Yeah.
And Stanchart looks very, very expensive. But if you look at the profits of Stanchart, sorry, the screen has moved.
Yeah.
If you look at the profits of Stanchart, they are much, much higher. They are several times higher than CIC. So we need to divide the profits by the number of shares.
Yes.
We need to divide the profit by the number of shares.
Okay.
And you see, for every shilling of profit, how much am I paying? So you might find, to your surprise, Standard Chartered, you're paying 9 shillings
Yeah.
per 1 shilling of profit. CIC, you're paying 20 shilling per 1 shilling of profit. So now, which one is cheaper? What should you be buying?
Standard Chartered, definitely.
Standard Chartered.
Yeah.
So I thought maybe just to add a practical
No,
example
yeah,
to what she said. She really did a good job.
He's the senior. He's the senior.
That makes some
Thank
sense,
you.
and I hope our viewers as well, you're flowing. And if you have any questions, these guys are here. The experts are here to help us understand these things. Maureen,
Yeah.
did you get that? I think it's quite an interesting discussion there to really demystify the fact that even these terms, we should not be afraid of them, you know?
Yes.
Just get in there. Even supermarkets have some things that you can't understand, but get in there and find out.
Yeah, and you know, the reason why this conversation is very entertaining is because we're just picking up from our previous webinar whereby we were looking at she's talked about the price list, and on the NSE app you can actually get the price list and look at some of those ratios that Bitha was actually talking about. And we had some of the experts who also, as you've also added to their points, to how the NSE app describes all those prices.
And by the way, before you jump into our other guest,
Yes.
because I know he also has some wealth he's about to share, you've talked about the NSE app, and I know we have a video that is up so that our viewers can also understand that, by the way, they can actually get into investing from the comfort of their homes and get to understand a lot of information that is there.
Yeah.
So I want us to play that video quickly, and then we can jump in with the session.
That's okay.
Over to you.
Investing has now gone digital with the Nairobi Securities Exchange application. To get the app, go to your Play Store or App Store, download and install the Nairobi Securities Exchange app. Here you will get market statistics, personalized notifications, financial news, and much more. Start your investment journey and keep getting regular updates on the app. The Nairobi Securities Exchange app. Investing goes digital.
Thank you. You bet you can download the NSE app on the iOS or the Play Store. Thank you for that. So on to George. You are our new investor. I would like to know, now you have a better understanding of how the market works, but what was your perception of the market before you started investing?
First of all, thank you for having me here today. And so I'm a new investor, and I started trading in the stock market recently, actually this year. So I don't have wealth of experience as my panelists here as well. Yeah.
We are many. Don't worry. Just go ahead.
Okay. So I think earlier on when I was starting out, we tend to think that it's very complicated. Like you see all these numbers, and they don't make sense. But then once you start getting into it and understanding what these numbers basically mean or what bid price would mean, it becomes very simple. So that was the first thing for me. Like initially I felt it was very difficult from the outside. Then once you get in and start reading about it and understanding, it becomes even more simpler. Yeah.
I think I'll call, I know he's a little bit because of, don't be intimidated by the 15 years experience, but I call it baby steps. You know, you have to make small steps so that you actually grow, because at there will be a time where we'll be inviting you also to speak to the 15 years experience.
Definitely.
Yeah, Maina?
No, I want Bidhi to say something on that is encouraging. I can tell she has something.
I was going to say, I have worked in the space for 15 years, but I won't lie to you. Every so often, I feel like it's my first day. Because with investments, there's risk affiliated with it. You'll make money, you lose money. With any investment, you're trying to articulate your own personal financial journey. You're trying to ask, what are my goals? What am I trying to achieve in 5 years, in 10 years, in 1 year? There's some spaces that you win, there's some spaces that you lose. When it comes to the NSE, you always have to remember that it is dominated by the foreign investors. And that's why we are saying these things such as PE and relative valuation are important, because the people you're playing against will not come and say that 2 shillings is cheaper than 146, first and foremost. But then second is to say, I was talking to George just before we started the show. I've started the process again. You don't invest one day and decide that's the end. Every single day, you're looking for an opportunity. Some days you make some money, some days you lose some money. Personally, for the last 15 years, I think it's been more of an investment in knowledge and interacting with the likes of Pius and local as well as global fund managers. And Mina and Maureen, the interesting that I've found is if you're actually, you assume the process of investing, then you end up finding we have an NSC that's largely held by foreign investors. If you look at Safaricom, which a majority of which is held by foreign investors, yet you as a Kenyan, you're contributing 100% of that revenue. So if you fail to pay attention, literally you're saying that you prefer to consume your life away as opposed to investing at this point. So I think I was just reiterating what he was saying, just saying that every single day it's a new process. I look at the market, I'm like, what can I do? I have lost money on the NSE, I have made money on the NSE. I'm still very opportunistic about the NSE, and I keep looking to see what can I do today, because it never stops.
Wow, I think that's quite encouraging. And maybe I just want to throw it back to George, because he's a new investor. He has said he has just started. And this is also very big encouragement, of course, because the fact that we are talking about starting and he has started, that's beautiful. So George, let me ask you, are you just doing this by yourself, or are you working with someone? Is there someone guiding you in this, or you're the guru now? I don't, just...
So I'm of course not doing it by myself.
Okay.
Most of the information that I'm getting is actually watching them on their channels, because I've seen Nabo Capital and I've seen also on Metropole TV.
Yeah.
And this information is out there.
Yeah.
So instead of trying to understand these things from nowhere, and there's information out there, and also like NSC with your Investment Tuesdays. Yeah. I could just tune into this and just get this information and understand and build on that as I go along. Yeah.
I like that, George. I was just hoping you'll mention Investing Tuesday. So if you're watching, you don't need to go to books. You don't need to go to do an MBA. If I may start there, I don't know. But you can actually start from just this information we're giving you. So check out this series. Over to you, Maureen.
I'm also curious to know what motivated you to actually start investing. What was that driving force? Just to add to that question, Pius had mentioned you need to get rich, but you need to work
That is where I was going with that also. Like, of course, you are like investing so that you can make money out of it. That is a very important motivation for me in this sense. And also looking at it from like a passive income sort of approach in terms of starting a financial journey, where I believe that for anyone to start, they should have proper financial literacy, like to start at the very beginning, and also have like a personal finance kind of approach where you understand that you need to save your money first. I think for me that was the beginning from last year, when I started thinking about it, and then I was now in saving my money over some time. And then once you understand the little basics that you need, like opening a CDS account and starting to invest, and then you can actually start buying shares. So yeah, for me it's just and now understanding that if you can buy shares and over time it will be money working for you as compared to me in my business, then that would be like the approach I took. Yeah.
Wow.
Yes.
Yes,
I was about to actually throw a question to you, but please pick it up.
I just want to acknowledge him. It's such a bold step to start investing. He reminds me, Warren Buffett started investing when he was 11 years. And he still says he started too late. So many of us start too late. And I look at him and I just admire the kind of horizon he has ahead of him. And there's something I normally say: every shilling of investment that I send out there, it comes back loaded with lessons. Every shilling. and it has never ceased, because some you make a lot of money, obscene money, and some you lose quite a bit of money. And you just hope that you make the whole portfolio makes more money than it loses. But even today, I still can't tell you this is guaranteed. In fact, that's a word we are not allowed to use, because investment is about the future.
Yeah.
So when you start early, you have so much headroom to pick as many lessons as possible. I can only imagine 15 years from now, he's going to be better than me. And this could just be the Warren Buffett of Kenya in the making.
Oh, thank you.
Thank you. So keep up the good work.
Also add to his point in terms of starting early.
Yeah.
I also wish would have started even earlier than this, because compound interest is like a gift for, every one of us here. Yeah. Just understanding that over time our money grows in terms of compound interest, then starting early is the best thing you do. And even like those, maybe I'd speak to the 20-year-olds or the 21-year-olds in campus, and they have that extra pocket money, and they could actually start from there, the basics, and then eventually over time they'll get to a point where they can actually invest bigger chunks of money, and also in the billions, of course. Yeah.
I think, George, now that you still have the mic, we had prepared a second question for you, and now that you have the mic, I'll throw it to you.
Okay.
How has it been so far? Somebody's watching and saying this guy has actually started, So how has it been?
The journey has been interesting because if you think about it, I've started this year and we're in the middle of a pandemic.
So,
because investment basically is, for me, how I think about it is, if I'm buying shares in a particular company, I'm actually buying into that company. And I think that's how fundamentally it should be looked at. So understanding that, and then you're understanding that you're buying shares in the middle of a pandemic where most businesses are suffering, then on its own, it's a big risk. So for me, it has been, as Pius has said, it's been a learning experience for me, especially these past few months. And I believe that's what I don't look at making like 100% of my returns on my money right now. I'd be lying to myself. But then I look at it in terms of I'm learning now. Then what if, in terms of 5 years from now when I've learned all these lessons, especially this tough period, what happens in a situation where the economy picks up again after like a post-COVID kind of season, and then I've learned all these things over time, and then at that time I'm investing in shares, I would be in a better position than I was right now.
Yeah, and as Pius has put it, the experience that comes with it, that's chilling. Maureen?
I feel like Pius has answered my question, my second question to him. Though I'd like to know, building an investment portfolio is not easy. And there are happy days. There are also days whereby you have lost and you still pushed on. What motivated you to do so? And what advice would you actually give to somebody like George, who has just started? And of course, over the years, there'll be days that he might lose a few shillings here and there to just continue pushing on to be up to where you are today.
I used to be an accountant, and I was tired of counting beans because I realized, when you're walking in town and you look at the buildings and you see some office light somewhere on, most likely that's an accounting office, and they're just trying to make a sense of the history. Yes. Investment is about the future, and the person who wins is the one who has the best view of the future. It's about a sneak preview of the future. You've seen those races where someone literally wins with a nose. Mm-hmm. So everything that we are trying to do is to understand the trends and the patterns and everything. What's going to happen? Okay, COVID has happened. So what's going to happen? Mm-hmm. If you can understand what's going to happen next year, you make a lot of money. Wow. That is everything about investment. It's about the future. So then there are certain things that need to be done if you want to be a successful investor. Number one, you need to be information hungry. You get, you need to be information hungry. The person with the most information wins the game. You get read, listen, talk to. I mean, she says she was benefiting from me. I was benefiting from her because I'd call her. What's the market color? What's going on? I mean, why is Safaricom rallying, and why are the banks falling? And you need to understand what's going on. So information. So the first thing that we really did when we were building our portfolio is to understand the continent, the opportunity, the landscape, what's going on. The second thing, you must have an insight. You know, that thing, that aha moment. Yes. And what we discovered was something very amazing. And I was giving him a tip. I'm not sure whether he understood I was giving a tip. But if you look at today, we have 60 stocks in the Nairobi Stock Exchange. Yes. How many of them are trading every day? 5? If you remove the 5 most liquid counters from any stock market in Africa, you are left with an illiquid asset class. Yeah. So that's one of the things we discovered. Wow. 90-something% of the stock market never really trades. And guess what? People don't do research on it. No one is really watching them, so no one is really trying to find out what's going on at Kabasit, what's going on at these companies people are not talking about. And because it's below the radar, some of these companies also we discovered are number 1 or number 2 in their sectors. Wow. Number 1 or number 2. By the way, did you know Kabasid, out of every 100 shillings of profit, of revenues, 40 shillings on average goes to the bottom. 40 shillings goes to the shareholder. Wow. Even Safaricom cannot be able to do that. And that's an insight. You get so a tip. So we got an insight that across the continent, if you remove the 5 most liquid counters, you're left with stocks which no one is really looking at. And therefore we came up with a name. Our strategy was going to be called quoted private equity. Meaning we are behaving like those people who buy private companies, but we invest in the public markets. The next thing is moment. You need to capitalize on a moment. You have information. Information leads you to insight, and the insight, you're now waiting for the right time. You're waiting for the moment to strike. And these moments, they come in different fashions. I'll give an example. When we had just done our strategy, we came across information that the biggest shareholder in Kabasid was selling. And Kabasid, because it was being bought out by BOC, had been suspended, or has been suspended for almost 2 years. It's like it was forgotten somehow. Yeah. And the guy had no mechanism of selling. And guess what? We were the only guys who are prepared to go over the hurdles, because there were going to be very many hurdles. Yeah. So it took us 2 weeks to negotiate a price privately with a shareholder. And then it took us 3 months to go through the regulators to give us a go-ahead to do an off-the-market deal. So May 2009, we bought the stake. We're paying 137 shillings per share. We paid 418 million shillings. I know you're talking about, you're about to tell me I'm talking about a lot of money, but the principles are the same. Yeah. Whether you're doing a lot or you're doing less. So anyway, we bought the stock. Yeah. 2 years later, the stock, we sold it at 1.2 billion shillings.
My goodness. It's good money.
And why am I saying that? I'm saying there has to be an insight. Yeah. So the moment for us was there's somebody who wants to sell, but there is no mechanism of selling. Yeah. If you grab them, if you're willing to work harder than anybody else, then you create an opportunity for yourself. Opportunities are created. Opportunities are not found.
Take notes.
So that's if you want to make a lot of money, then that's the thing. So lessons. You asked me to advise. If you want to invest, don't go. Investment is war. By the way, if you've seen one of our videos, we've said investment is war. You can't go to war with no weapons.
Yeah.
You get it? You can't just show up for war with no strategy. You've got to find the vantage point where you're going to overwhelm your enemy. So, number one, you must gather information. What's going on? Number two, you must have insight. And that insight will allow you to narrow down to opportunities, because there are 60 securities. You cannot be looking at 60 securities every day.
Yeah.
You cannot go to the supermarket and you have no idea what you're going to buy. So that insight leads you to what you call a philosophy. I look for this kind of stocks. So us guys, we were not looking for the 5 most liquid stocks. We were looking for the illiquid, below the radar, and have great potential.
Wow.
And we found them across the continent. So information, insight, seize the moment.
I don't know whether to speak or to take notes now on the third one. Seize the moment. Thank you so much, Pius, for that. Maureen, what's going down to you? Yeah, you want to jump in?
Yeah.
You're inspired. Just go ahead.
Definitely, I'm inspired.
Yeah.
I'm just curious in terms of getting information. Where do you source that information? Because I guess for me, I'd easily go on a company's website, look at their financial statements and all that. But I'm sure maybe you have more insight on that.
Yeah, it's that's a profound question.
Absolutely.
There is what you call public information, and it is available to everyone. If you're analyzing financial statements, by the way, everybody has seen financial statements. So there's something we call in investment mosaic theory, meaning you put pieces together until eventually, when you bring all the pieces together, you have a profound insight coming out of it. So for example, take Safaricom. You want to know whether you should invest in Safaricom or not. I'll do the normal things. I'll look at the financial statements. I'll do management interviews. All those are kawaida things. But talk to the distributors. Who distribute for Safaricom? Go find out. I know. Bamburi Cement. Go to the distribution depots. You guys, you're selling how many brands of cement? How is about Bamburi going on? You know, you're getting information now from the guys who are doing the real. But how has your year been? You get, By the year is really good. We are going through COVID. How has it been? Are you guys selling beer? You get, So you are gathering information that you naturally not get from management. You talk to suppliers. You talk to, this guy supplies this. Are they paying you on time? If they are paying you on time, they have cash. You get, if they're not paying you on time, then something is not okay. So you talk to anybody. I remember I was buying a company in Ghana. I spent 2 weeks in a room, holed up in a room, doing due diligence. And I was trying to make sense of the company. And then I took a break. I went somewhere to town to have lunch. And as I was coming back, I got into a cab. And it was a bank. So in the cab, I thought myself, let me ask this driver. By the way, do you have a bank account with this bank? And he told me no. Yes, I asked him why. He said, this bank is bank for the rich. Do you know, every information I had gathered, it just fell in place. I came here, I spoke to my board, I told my board, if you want to understand this bank, think of CBA. This is the CBA of that market. And we invested, we made a lot of money. Mosaic theory.
This is the aha moments, right? I hope you got answered well. I picked a few things here and there.
So it's information.
Absolutely.
So, Tell us, you have, as a business journalist, you have interacted and talked to so many people. So what is the one challenge that you have faced that you'd like to address?
Okay. Let me answer that, but allow me to just chime into the question on information. So in my previous career, I was working with local and foreign funds. And I found that anytime I evaluated who are the funds that were doing better compared to their peers, there was a science to the process. What used to fascinate me was you would see foreign funds book a trip to come to Africa for 2 weeks. Then they'll go to equity, for example, meet senior management, and then they'll request to go to a Kariobangi branch, another branch. They'll go to the agents. Some places they don't understand Swahili, so you go with them and you translate. I'd even take clients to Tanzania. And then I looked at the counterpart in terms of now the local funds in East Africa. And there was the process of, we have this information, so I know what I need to know. So I'm not saying that there's a process that's better or not, but from that, it actually now birthed a curiosity in me where I asked, why is it that anytime we look at the African continent, you can only spot a couple of billionaires, but we are the people who are consuming, and we are the people who are facilitating the companies, whether it's telcos or banks, to make money. And they're making billions of shillings. So out of that aha moment for me, then my challenge, or rather I felt my contribution to just building wealth in Africa was, how do I take this institutional mindset and bring it to an individual mindset where, kama tunaongea, and I'm talking to George, it's okay, George, you're in Safaricom, as Pius has said, what are you doing? Every day, how many of your transactions reduced on M-Pesa? Are your charges reducing? You know, the people around you, your agents, are you talking to them? So putting a methodology to that element and trying to see this 15 years we've learned, how can we help you learn it? But then the challenge that I find in that space is people want to just be told, go buy Cabasset. You're not going to become a wealthy person by being told to buy Cabasset, because the same way you wake up to go get your money every single day is the same way you have to wake up and defend it and help it grow. So I think that whole context of financial literacy is now something that we have been doing, trying to say, step one, okay, yes, but step one, this is the science, because there is a science to investing. Now, to answer your question, when it comes to the challenges that we've had from the numerous engagements, so I'll say it's twofold. So we do engage with the captains of industry, and then we also engage with the likes, George, new investors, people who are just hungry for knowledge. When I speak to the majority, people in the retail segment, this is the first time that people are more open and receptive to hearing about investments and wanting to actually get a professional perspective. The first time I jumped into this space of trying to teach people about financials and financial literacy in 2014, people used to tell me, yeah, you buy us coffee for 2,000 at Java and then show us how to make $1 million from 1,000. I was like, that doesn't work. But today, either because of COVID or whatever has happened, there's so many opportunities, people are open to it. So the challenge I find there is that there's so much information, people are impatient. And for you to get rich, I have come to appreciate the hard way. I have lost money, actually, a lot of money, but I've come to appreciate time, discipline, and patience. Discipline, how am I going to do it and not just jumping in? It takes time to get wealthy. You could get into those opportunities where you buy today and exit tomorrow. But you do realize that the kind of funding that Pius is talking about is millions of shillings. So you can't assume I'll have my 4,000 and I'll exit at 1.2 billion, right? So there's the element of time, discipline, and the element of patience. So the more you start creating, what is the science that makes sense for me as an individual investor? How do I get in? So like, for instance, for George from here today, you pick a thing or two, then you go document, what does this add to my existing process? What does it detract from my existing process? So that's the first thing that we have found. And then the final thing on that retail segment was what George talked about. You cannot isolate investing from your personal financial journey. You absolutely cannot. When we talk about discipline, I like what George has said. You must start with savings, because what you're trying to do is, the reality is in Africa today, we don't have the luxury of having inherited tons of money from our previous families, so I can go risk it. I can go buy something that is a high risk and I'm okay. I'm like, we are struggling just to put food on the table. And what that tells me is you must appreciate that we are in the space where you have to save emergency funds, accumulate your capital. And my philosophy is once you get something 10%, take that 10% and risk it. Ikipotea ni sawa, ikikaa na wewe ni sawa. But the reality is very few people who have the luxury of saying, if I lose $1 million shillings, it's okay. It's very few people. It takes a long time to actually accumulate $1 million, having the discipline. And so that's the time, that's discipline, and that's patience. Now, on the flip side is when we speak to captains of industry, there is the element of COVID-19, and you can't ignore that this has had an impact on Kenya and on the world as well. And when we are looking into the year 2021, we are in a space where the government is not collecting enough funds from taxes. Yes, it will be reinstating taxes, but there's not enough economic activity for that. That means debt is becoming a big thing. They have to keep borrowing that debt. And that debt is, they have expanded the allocation from the domestic market by a huge sum. So they are looking for a lot of cash from internally. So you can either interpret that and be your other Kenyan, mazee serikali nashinanga tu inapoteza do, or you can ask yourself, this is the challenge, what's the opportunity? So first and foremost, the opportunity in such a narrative is, number one, can you wait it out and see interest rates are going to go up because the government doesn't have money, so if you want to look into risk it, there's an opportunity for debt. And then it also tells me that the moment that narrative becomes apparent to everybody, the prices we're seeing here will come off. So there will be some cheap valued stocks in another year or two. And you can't ignore the political noise. So that's the first thing that I would look at and say, yes, there are challenges that abound, but as an investor, you're like, how do I change this challenge into an opportunity? And I think whether you're looking locally or globally, we're at the state where any negative news, buy. Just be sure of what you're buying. So if there's any material information, then look at it. Don't be the part of the people who just keep talking about other people. Come up with your own idea and say, okay, what does this mean for me and how do I translate it? Thank you so much, Maureen.
Wow. Maureen, I think today is a session of the one you sit back and just learn and chew in. Yes. That's what I feel today. You've spoken vividly about the element of this patience. I think that's a big one, especially for investors in our region. We need to have that patience level, which was also touched by Pius, discipline and time. And I just want to ask a very basic question, because I think most people are here saying, yes, we're talking about investing successfully. And Pius, you also alluded to it. It seems there's a lot of work to be done, and I think there's a lot of hard work as well in this market. I know we have said get in, but getting ready to work. Are there channels that would make this a little easier for first-time investors? And by this I mean, because even George was asking, information, where do I get it and all that? Because you've mentioned a word like brokerage firms. From my understanding, there are people who are dedicated not 24/7, but maybe let's call it working hours, just checking on these companies on behalf of others. Because maybe I am here and there's a viewer there saying, do I have time to go to the ground? Are there people who I could entrust my 1 million? That's being ambitious for others, but anyway, by 1 million, so that at least I am certain that, yes, I may not really get to the ground to all these shares that I've bought, but at least I am in safe hands. I don't know, a quick comment on that. I don't know whether it's Mbithe who's going to say, or it's Pius. Pius, you have the mic. Go ahead.
Let's give Mbithe a break. We have a disease. My observation. And it's a do-it-yourself. Do everything yourself.
It's a bad disease, eh?
It's a disease, and it's a terrible disease, and which I've also suffered from. I've had to learn from it. As much as I lead an investment firm, I actually discovered I do not have the time to monitor my personal portfolio.
Okay.
And I was seeing the NABO Capital portfolios are doing very well, and my personal portfolio is just languishing. Because I remember after 6 months, by the way, I have something. I check, my friend, the price has halved.
Money gone.
Money gone.
Yes.
This is okay. There are two things. Well, let's distinguish two things. There is investing and there is speculating. Majority of us do speculation, not investing. Investing is what she has just described. It is backed by a science. It is backed by a process. It is backed by a discipline. It is backed by time. There's no get rich quick scheme. Let's get that over with that. Speculators, they're like, market is falling, we buy, but it doesn't work like that. So one easy way, which I've actually followed myself, is I actually gave up my personal portfolio and decided, let someone professional manage it for me. So I can continue doing what I'm good at, and that person can do it. And I'm not saying everybody should follow that route. There are two ways. If you have the time, do it yourself. And you have the knowledge and the discipline, do it yourself. Because Mbite here, she has over 15 years experience. She has made money, lost money. She is an experienced soldier. Imagine her meeting with him day one for battle. One hook. One hook down. I'm not saying literally. But the thing is, investment has some of the most brilliant minds. In fact, there's a study that was saying the best minds are no longer going to medicine. They're coming to investment. And they're applying themselves, and they're coming up with all these algorithms. They're coming up with all these systems, softwares. People can know what's going on when they're in London more than There's one client I've had. They know how their portfolio is performing better than me who is managing it, because they have softwares and softwares and softwares. You can't beat them. You can't beat them. So if you have the time and the discipline, I'd say do it yourself. If you don't have the time, walk to a fund manager who is licensed by a capital markets authority. Choose carefully who you can trust your money with and work with them. They will teach you a lot, and maybe eventually you can take over the portfolio and run it by yourself. They will tell you what's going on in the market. Have friends like Mbitha in the market. Ask them what's going on. They will give you information. Remember, information hungry?
Yeah.
And you will make money. Yeah.
All right. I don't know. Maureen,
go ahead.
Yes, you can be there.
I completely agree with what he said, because yes, I've worked for 15 years, but it's only until recently I started realizing I talk, but I don't act on what I speak.
Okay.
Because, the thing, again, and I'll come back to the African narrative, and it's something that I am very passionate about, because our mental state is be an exceptional employee. So you have to defend your paycheck. How do I defend my paycheck? I make sure that I am the smartest person that Pius is speaking to. If not, I am top 3, because he will reward me with a trade.
Yeah.
So I'm not internalizing that information. I'm just, this is what's going on. And then I used to look at his portfolio and other people's portfolios, and I'm like, okay, I can see what you have here, but you need to switch from this bank and, switch into this other bank, and this is what would happen. But then there's a bias, and it's actually a sin. I'm born again, and there's a verse that says, if you know and you don't act on it, it's a sin. So in this continent and in this country, we talk a lot. Oh, uliona bei ile Nairobi Business Ventures, what was going on? Why did it go up? Mumias, people knew it was going down and they were losing money. So how do you act on it? So the reality is, even I've been in the industry and I'm working very hard to get out of that bias. So even as you're getting into it and you want to make money out of it, I study what people who've been wealthy have done. Honestly, first and foremost, take a route of if you can outsource it. So for us, we have money market funds locally, and because of technology, even local institutions are beginning to give you products that give you access to African assets to European assets, Asian assets, as well as American assets. So use that if you can find people who can do it for you, but then keep tabs on it. But the moral of the story is, Maureen and Maina, please please act on the knowledge. Don't just be that person who speaks about it and you're the loudest on Twitter informing people and not consuming your own information.
Act on the information you have right now.
Actually. And
so all those notes you have?
Yes, there's so many. So there's so many. I tell you, I will have to go and do some repeat check on this.
Yes.
Now that we are coming to a close, and I tell you, most of our viewers today have decided to just sit back. Yes, we have 1 or 2 or 3 questions that have come in, but you know, sometimes a conversation can take a direction that you really want to just flow with. And to our viewers, I know you are really interested into this, but you know, just keep them coming as they come. We'll still answer you even after this session is over. So we're coming to a close. We have about 3 minutes or so, so I would want you to keep this short. And because there are several questions that I and Maureen had prepared for you, so I will pick the last one because some of them you answered in the course of it all. So in your opinion, what's the current level of financial literacy? Because you're a journalist, you know, you play some hurdles here and there in that. So what's the current level of financial literacy among the youth, and what can be done to improve on it? And I would want you to answer that question in a way of motivation as well to those guys. Yes.
Thank you very much. My M-Pesa number, and you can, you know, book an agent anyway. George is the face of Africa today. Over 70% of the population cutting across our country and the African continent, 35 and below. I was looking at the National Bureau of Statistics, and for every one of me, I'm in my mid-30s, there's 2.5 of people who are below 30. When I get closer to 21, there are possibly 3. Second thing is the wealth is concentrated with the older generation, right? Which means the likes of George, if they decide to go the older way, which was go buy a shamba and then wait and then build on it, that capital is not there. We've talked about a situation where your government is hungry for the same debt that you want to chase. So opportunities such as the NSC, capital markets, and opportunities such as money market funds, so stocks and money market funds, have broken down the entry point for investing and allow you to start early and be able to grow. So the conversation today is, at that young age, please choose to invest in your business if you can. It gives you the best return. The returns you see here on the NSC will never match. I do businesses. There are things I'll buy and I can sell at double the price. If you're able to do that and build a business, fair enough. It gives you active income. B, start early. Look at either these stocks or whatever equities you are looking at and the money market fund, because if you do not do that, you'll end up continuing to have the narrative of unemployment and poor people in another 10 to 15 years, and nobody got time for that. So as a parting shot, as a motivating shot, the youth are the face of tomorrow, but you can't sit and wait for the government to come and sort you out. You have a brain and you have energy, something that you won't have in another 15 years. So start today, build those opportunities, extract those opportunities, and keep going at it. And with regards to financial literacy, it's not there. So come and talk to people like myself, to Pius, and people like this stock exchange, because now we are beginning to bring that conversation and say, how do we break down this experience and what we've learned into a way that you can be able to absorb it. And the same way you make a budget for having coffee with your friends each and every single month, you need to make a budget for financial literacy, whether you engage with us, whether you buy a book, whether you learn something, you watch a show, it needs to be part of your regular routine. Thank you so much.
Wow. Maureen.
Thank you so much, Mbithe. We have Scooby, who is asking, is it ever too late to start? So Scooby has just summarized my question to George. So I'd like you to just answer Scooby, is it too late? And basically, you're giving a last message to those who are hesitant into coming into the stock market.
Thank you for the question, Scooby. I think it's never too late to start. You can start now. I mean, it doesn't matter what age you are. But even if you're 40, I guess it's a good time to start. Because there's this thing in terms of even making decisions in life. You would wait for, you'd say, like, I'll start investing 5 years from now when I get the money. 5 years from now, we'll get there, and then maybe you won't even start. And then you'll be like, I'll start investing when I get more money to buy enough shares in a particular company. Before you know it, 10 years has gone, and you haven't even started. So I believe that the best time to start is now. It doesn't matter whatever age you're in. So yeah, that would be the advice to him.
Now is the time.
No, there are so many questions here, and I wanted to shoot them all to Pius, but because time is not on our side. But I want to read this question out for you, Pius, and there will be a private one that I'll ask as well, that I'll put you on the spot on. You talked about the dominance of certain companies in the market, and somebody has asked a question. His name is Njoroge Henry. I have not even sieved it, so I'm going to read it as it is. So he's saying Safaricom share value now accounts for close to 60% of the value of the all NSE listed shares. I hope you'll correct that if there is anything wrong with that. 5 of the top stocks accounts for 80% of the market value. A once vibrant stock market with over 60 stocks has been reduced to about 5 stocks in the market. The concentration risks are too high. If Safaricom were to fail, 60% of the share will be wiped out. Kindly comment on this. So I would want you to comment on that now that you have those insights or so. And as well as bring in your parting shot to this as a motivation, because you're a successful investor. How would you combine that question and that in a minute and do your best on that?
Thank you. It's a very broad question, but I want to bring a very interesting statistic. 1% of the richest people own 45% of the global wealth. 1% of the richest people in the world own, let's say, almost half of the entire global wealth. What is the difference between that 1% and the rest 99%? Because that 1% are the ones who are driving our market to look like the way it is looking like. They're the ones who are making 80% of our market cap to be concentrated around 5-6 stocks. It's a mindset. The difference is mindset. The difference is mindset. A very wise man told me, look, I won't mention his name, but he told me this. He's one of the billionaires around. He told me, Pius, follow the bee, you'll find the. If you follow the bee, you find the honey, isn't it? If you follow the
Sorry,
bee,
I must confess. When you say the B, I thought you were the billions. So I said you'll find the M, you'll find the millions as you follow the B. But go ahead.
Yes. Follow the bee, you'll find the honey. In investment terms, what he was telling me, follow the cash, and you'll find the best investments. So let's take, for example, Safaricom, which is 60% of our market cap today. When Safaricom was IPO'd, it was going for 5 shillings per share, and it was paying a dividend of 0.1, 10 cents.
Yeah.
Correct, eh? Mm-hmm. This year, their year ends in March. Yeah. They reported revenues of 250 billion shillings.
Good money.
Is it 250 or 240? There, 250 billion shillings.
Yeah.
Then they were doing maybe a third of, maybe 50 billion revenues.
Yeah.
Now they are 250 billion shillings, just over 10 years later.
Wow.
The dividend they paid this year was 1 shilling and 10 cents and 40 cents. Mm-hmm. So the 10 cents has grown 14 times over a period of just over a decade.
Yeah.
Why? Because their cash flow, the cash generating power of the business has quadrupled over the years. So because of their cash in the same period of time, what has happened to KQ? KQ used to be one of our blue chip companies, isn't it? Eh?
Yeah.
It has gone the opposite direction.
Yeah.
isn't
Especially
it?
during this season.
There are some blue chip companies 10 years ago, today are penny stocks. And if you look at their cash flow, their cash flow has declined significantly. You get?
Yeah.
So follow the cash and you'll find the best investments.
Okay.
Follow the cash and you'll find the best. So we cannot, the reason why we have those 6 companies, besides the liquidity,
Yeah.
is because they're generating the most cash in our market. They're your largest companies.
Okay.
They generate the most cash in this market.
All right. All right.
So my tip to everyone,
The tip now.
follow the
bee.
Follow the bee. In this case, follow the cash.
Yes.
And you'll find the best investments.
Maureen, it would be unfair for all the questioners. I think I want to tell our successful investors.
Yes.
They will only have 10 seconds to give those straight answers. So could you shoot 1 or 2 very quick ones?
Yes. Because,
Yeah.
I
Directly.
feel that if a student doesn't understand the fundamentals, it's very hard for the student to make use of the information that they have. So to our teacher who has an academy, Dan Musheke is asking you to just give us the difference between the stock and the forex so that they actually know which market they're investing in. One liner.
Karibu sana. I wear many hats now. In that one, call me Teacher Mbithe. So in that context, so shares are really what we are saying here. You're buying a part of a company, and then it gives you the right to earn a dividend, and it also gives you the opportunity to buy low and sell high. Forex, you're trading currencies. So you're trading either the Kenya shilling or the US dollar or the Australian dollar or the British pound. You're trading one currency against another currency. So that's a very different market. The drivers for both markets are different. When you are looking at Forex, you're looking at what is happening at a country level, at a macro level, what's happening in Kenya if you're trading against the United States dollar, what's happening there. Stocks, you're looking a bit at what is happening at the country, but you're looking more at how is this company going to generate money. So those are 2 different asset classes. In terms of risk, Forex is slightly more riskier, and you need to be on the watch out for information even more than you need to be when you're looking at stocks.
Wow.
It's a good answer.
Yes.
Maybe because there's something else that she also mentioned, and there's a question on that, so I'm going to shoot it straight, answer it like you just did in the other one. So someone was asking, I think this is Eunice. So we are saying the higher the PE ratio, the more profitable the stock. It's a question. I think it's a nice yes and answer question. I don't know.
Thank you. No.
No.
If we are saying the higher the PE means it is an expensive stock.
Okay.
The high PE, it's expensive. Low PE is cheap, but you have to now ask yourself, why is it cheap or why is it expensive?
Great.
But high is expensive, compare it to its peers. So if it's, for example, looking at KCB, if it has a PE, I think now it's probably 9 or 7, then compare to the other banks to see, is it more expensive than the others or is it cheaper than the others?
Great answer, great answer. Is there?
It was easier to understand PE when Paya said it's how much you pay for profit.
Yes.
Yes.
1 shilling of profit. Absolutely.
So on my end, Maina, I think we've addressed all the questions.
Yeah.
Yes.
Yeah. I only saw just one more. Somebody was asking, is it possible? I think I better just read it as it is. I think they were asking whether you can make a 10% profit every month on when you trade on stocks. I just missed the name. Pius, that one will be yours as I put you on the spot. I'd want you to tell us, including me, how you felt. No, let me phrase it differently. When you made your first million, well, you are investing in this market, and how it felt. Yes.
Yeah. Okay. They are what you call day traders.
Yes.
Actually, maybe now we can say there are 3 categories of investors.
Yeah.
There are speculators.
Yes.
Which many people fall in that category because they even have no idea what's going on. They're just plunging in.
Yeah.
Because everyone is investing.
Yes.
So they're speculators. And then there are traders. Traders, they work in the market. And they work with rules. They say, I'm buying very short term, I'm buying Safaricom at 31 shilling. The moment it hits 32, I'm out. and they have an anticipation. Within the next 2 weeks, it's going to hit that, given the momentum. So it is possible to make 10% per month, but it is hard work. And it is also not possible for you to be consistently 10%. So we can say it's possible to make 10% on average if you have a very, very good strategy and you are very, very good at executing it. And the cost is low, because also every time you trade, there is a cost. When you buy, there's a cost. When you sell, there's a cost. So your 10% could easily be eaten up, half of it just by the cost. So is it worth it? So they are traders, and then they are investors who are long-term. It's Warren Buffett who said that if you do not have at least 10 years horizon, don't touch stocks. Don't touch stocks. If you don't have 10 years horizon, don't touch stocks. So you're looking, whenever you're buying into Safaricom, you're saying, next 10 years, how is this company gonna look like? And you're buying into those 10 years. So when I made my first million,
yes,
I was on top of the world. I was flying like a kite.
Yes,
and it really felt great. I remember when I joined Centum Group.
Yeah.
One of the things that struck me, the PA to the CEO's office was actually trading in the market, and she told me, "I've just made 200,000 bob." I'm like, "What?" I was an accountant then, so it's possible, but you must have a stomach to lose money.
Okay.
In fact, for you to join my team as an experienced professional, one of the questions I'll ask you: have you ever lost money? If you've never lost money, you can't join my team. You don't have the lessons. You're still a baby.
Learn how to lose.
The greatest lesson, the greatest lesson comes from losing than from gaining.
Yeah.
Thank you.
Maureen, I think I'll throw it to you. Your takeout, if you have any, because there are so many, if I was to give mine, it would take an hour.
I know. Thank you, Maina. Thank you. I'd like to appreciate all our panelists for creating time to be here, and to congratulate George. You made it here to the Investing Tuesdays. We can all clap for him. And I'd also like to request our viewers that you can keep your comments coming in, your ideas. We appreciate them all, and we actually put them into practice. So I'd throw it back to Maina to conclude.
Yeah, I would have actually summarized with many other things that I took out, but I think I will just go with this statement, that opportunities are created, they are not found. So I think that's a challenge for me. And also to say that, I'm glad that Pius is next to me here. He's going to be my friend by force from now henceforth, because I also want to feel that good feeling that I felt, not just to make the million, but also the B. We were talking B's today in terms of billions. So thank you so much for joining us. We have to end. Sorry we exited by about 15 minutes, but the conversation just needed to flow. So thank you so much for joining us. Until next other session, which is the week after this one, for the final Investing Tuesdays. It's not going to just be final, so you can always catch up with what we have missed in the previous Investing Tuesdays, and as well as get into this market. It is open for everybody. And of course, as we started from the word go, you don't have to have the million or the thousands, even as little as even 200 bob or even lesser. You can still join in. So thank you so much for joining us. Until next time, bye-bye. And also thank you so much, and bye-bye from our panelists as well. See you.